Hey everybody, I hope everyone's doing well and had a good day. This is the recap of the Emini for Tuesday, February 25th, 2025. I'm going to try to keep it brief today, and I have an update with my project that I'll share at the end of this video. So, going into the day, the higher time frames were more bearish. We have this, let's see. So here's yesterday, big bear breakout, deep pullback, and a second leg. We're channeling down. We're opening down here near yesterday's low. Let me just draw that in. The prior day's low is often support or resistance if we break out below it. And that's why I like to have those prices drawn in when I do the reviews. And like I said, I'm going to try to keep it brief. I've been doing these reviews a little bit later because after the market closes, I like to do some work on my level 2 study, and then I'll do a brief recap, because right now the level 2 study is my main priority, and I still like doing the reviews and on YouTube, but I'll get into that more at the end of this video. So today, what happened? We had a small gap down on the open, a couple of trading range bars on bars 1 and 2, and then a bear breakout bar on 3. And 3 overlapped the prior 2 bars by a fair amount, really just barely broke out below bar 1. But there was a gap between the close of bar 3 and the low of bar 2. So if a trader bought below bar 2, let's say a bull buys below bar 2 because it's a double bottom, it's a bad sell signal bar, and who knows, for whatever reason, maybe they see like 2 legs down, they're expecting 77 to be exhaustion. Whatever the reason is, it doesn't matter. A trader buys below bar 2, they're trapped on bar 3. They're holding a losing position on the close of bar 3. What's that trader going to do? It depends on really their studies and how they manage their trades, but you can see what traders did in this case. The market retested the low of bar 2 during bar 4, and traders sold. You have bulls who bought, trapped, disappointed, selling out of longs. You have bears who sold for any reason, or they didn't sell, and they're trapped out of a winning position. They think bar 3 is a strong enough bear breakout that it's going to get a second leg down, so the bears are looking to sell, and they'll sell at temporary resistance, the bar 2 low. So everybody sells there, and the market continues lower. So reversal, follow through, more follow through, bar 5, big, small, big. This is a type of 3-bar micro channel that it's basically 2 legs within one simple leg. And the reason I say it's 2 legs is because there's a pause in momentum. Good momentum on 3, pause on 4, good momentum on 5. This is a trading range on a smaller time frame. This pause in the trend. So we have leg 1, pause, leg 2, the market often comes back and tests, in this case for the bear case, the low of the small middle bar. So big, small, big. We have a micro gap from the close of bar 5 and the low of bar 4. Bar 6 rallies, tests that price, sells off, similar to here. It's a breakout point test. So far, the bear trend is strong, and gaps are closing, but they're negative gaps. They're body gaps. So you can see traders are selling breakout points. Another breakout on bar 7. Pause on bar 8, but is bar 8 going to reverse this tight bear channel? Probably not. Therefore, it's probably a minor reversal, more caused by bears taking profits than aggressive bulls buying. So probably more sellers above bar 8. And that's what happened on 9. We went outside down. Looks like we came close to testing the bar 7 low. Didn't quite get there, but that was another breakout point. The bar 7 broke out below the low of bar 5. And that's a breakout point. Got close to getting retested, and we sold off. Now, down here, The problem down here is this might be a late leg. And if you're counting spike breaks, maybe it's only leg 2. And it depends on where what do you call leg 1? For me, the sell-off down to 5 would reset the leg count. So leg 1, and again, if we're doing spike breaks, this entire sell-off is a micro channel. Then we have a pullback on bar 9. So leg 1, pullback, leg 2. But if you are going to count implied legs, implied pullbacks, we have a breakout, a pause on 6, breakout, pullback on 9, and then a third leg down to bar 12. So the problem down here at the lows with bar 12 is that we have 3 legs down. The bears might be exhausted, and this is unsustainable selling. I mentioned, I think in yesterday's video, because it was a sort of similar sell climax on the open. Most bear trend days don't have price action like this. This is not sustainable selling. It doesn't last all day. When you have big bars like this, you have to wonder, is it only caused by bears selling aggressively, or is it just as much strong bulls stepping aside, waiting to buy lower? So sell climax, pause, sell climax, third consecutive sell climax. And look at the approach down to bar 12. On a smaller time frame, it's more clear. This is a spike in channel. Maybe you include 9 or just bar 10, spike, pullback, and we channeled for a couple of legs. So 13 is actually a credible buy, which means if you're short, you can exit shorts above bar 13, and if you're an aggressive bull, you can buy above 13. It's definitely an aggressive buy, but I think it's more reasonable if you're short to exit above 13 than to buy above 13. But the buy makes sense. 3 consecutive sell climaxes, spike in channel, we might have to test the high of bar 11. And then 14 was a really good entry bar for the bulls. This traps traders. Anyone who studies LE knows this is an I1R. Whenever you have a reversal bar, so bear bar, then bull bar, bull, reversal bar, and the bull bar gets 1R without a pullback. That's what LE calls an I1R. So the bulls got an I1R on 13 and 14. And these typically create support at the breakout point. So the high, the stop order buy at 13 is probably going to be at least minor support or temporary support. So we rallied on 14 and we paused on 15, and because there might be temporary support at the 13, at the high of bar 13, this bull breakout, this reversal and follow through will probably get a second leg. You can say this is a second leg because we paused 15, micro double bottom, 16, rallied a second time. So 1, there's a high 2 in there, second leg. And because that's 2 legs up, after a really big sell climax, we're also testing this breakout point. There's reasons to expect resistance up here, 2 legs up against a stronger trend and breakout point test. So when you get 18, I think traders who are long for any reason probably exit below bar 18. Always in short bears, if they exit above 13, they can sell again above or below 18. So always in bears, exit above 13, sell again below 18. Bear trend, trend line break. So this is strong enough that the market's either in a bear channel or a trading range at this point. You don't get a 6-bar bull micro channel in strong bear trends. So this is actually pretty damaging. So it's a job well done for the bulls, but for a major trend reversal, there's another ingredient we need, and that's a retest of the trend's low. So you often don't get a bear trend that immediately reverses into a bull trend. You need a bear trend, trend line break, retest, and then maybe a major trend reversal. 18, 19, reversal and follow through for the bears. Strong enough for a second leg, and traders expect, the odds are we're going to get at least one tick below the low of 13. But I mentioned temporary support at the 13 high. So you can see we vacuumed down around that price, we bounced, and then got the second leg down. And this was a nested second leg price action as fractal. 1, pullback, 2, 1, pullback, 2. Like I said, this is either a bear channel or a trading range at this point, so traders are going to buy at new lows, bears buy to take profits on shorts, and bulls buy to go long. This rally was strong enough for a second leg, and the bulls have not had their second leg yet. Deep pullback, even deeper than 100%, but some traders will use a very wide stop, maybe 150% or 200%. If a trader used a 150% pullback stop for this rally, the stop would be this purple line. The market never came to that stop. So bulls could buy here, maybe stop here, and look for a second leg up. And because of the possible major trend reversal, 26 is a bar after 2 legs down and a trendline break, that bears might exit above 26 and bulls can buy above 26. And then we got the rally up to bar 30, and you know that this micro channel from the bulls is strong enough to get a second leg. Is it a second leg trap? 1, pullback, 2. It might be, but this is time control and price control. So the bulls, it's fairly orderly. It's not too climactic. Maybe 28 is a little climactic and 30, but it's not super parabolic. And let's see. The bears, if this is a trading range, the bears may be hoping this is the top of the range. Well, the market broke out above this high, and the reversal wasn't all that strong. Is this reversal attempt major or minor? Is this going to undo what the bulls just did, or is this a pullback? It looks like it's a pullback. Just compare the bar sizes, these bear bars and dojis versus the bull bars. The bull bars are clearly stronger. This is also crossing the moving average. The moving average became support. Whenever any price is expected to be resistance and price breaks through it, and this is true for the opposite case, but in this case, if you're expecting the moving average, the first test of the moving average should be sold, and you sell the moving average and you're trapped. The moving average, you're expecting resistance, it now becomes support. So we come back and test the moving average where traders got trapped, it becomes support, and this is what leads to a second leg, trapped traders. Bulls who didn't buy here missed the rally, bears who sold here trapped into a losing trade, that creates support below. Bulls and bears looking to buy. They buy here, and that's what contributes to the buying that produces a second leg up. Strong second leg up by the bulls, and it's fractal, so 1, pullback, 2, 1, pullback, 2. This is really tight. It's probably going to get a second leg of its own. But overall, it's a trading range day. Look to the left. We're still within this sell-off. So this is not a bull trend. They're fairly strong bull legs in a trading range, but it's a broad trading range. So the pullbacks can be deep. And if we think through the market cycle, that will explain why we pulled back down to bar 49. 36, bull breakout, doji on 37, spike, and then a pause, and then we began to channel. And we know that the start of the channel, the bar 37 low, often becomes the bottom of a trading range, and it's a test target and usually becomes support. So we rally for a couple of legs, Reversal and follow through, 45, 46. Strong enough bear breakout for a second leg. Pullback. You have trapped traders below 44. Bulls see a 5-bar micro channel and a bad stop order signal bar. They buy below 44, trapped on 45, and 46 does not quite retest the low 44. So you've trapped bulls here. And you have bears who have the same problem. They don't want to sell a 5th consecutive bull bar, especially one that closed bullish. Not a very good signal bar for stop orders. So bears who did not sell missed the breakout. Both sides are looking for a pullback to sell. The bulls hoping to avoid a loss or exit at break even, and the bears looking to enter the market at a discount and capture a second leg down. 48 classic second leg trap. The first breakout of the first leg doesn't look as strong as the second, but the second leg is testing support, and it's within this entire bull leg, which is stronger than the sell-off. It's also maybe 50% pullback, maybe a little deeper. I have 50% usually on default, but I had it off for the studies I'm doing right now. So big up, big down, big confusion. The bulls should get a second leg. The bears should also get a second leg. And that creates a stalemate and probably trading range price action over the next 10 or so bars. So the bulls should get a second leg. They get a deep pullback, then a buy vacuum to test the highs. Bulls who bought the close, it's buy the close 41, 42, 43, maybe 44. You buy the close 44. You're trapped, you're disappointed. What are you going to do on a retest? You're probably going to sell. And if you're a bull looking to sell because you were disappointed the last time you bought here with what the market did, then you might look to sell out of longs here and not look to buy again after maybe 10 bars and 2 legs, sideways to down. So you have bulls selling, you have bears always selling, and that creates selling pressure. And the lack of buying, the price has to go lower to find traders willing to buy. So breakout follow through for the bears, back at the top of the range. This breakout probably will get a second leg down. Deep pullback, but less than 100%, and then the bears get their second leg. In this case, this one subdivided into 3 legs. 1, pause, 2, pause, 3. So this price leg is comprised of 3 pushes, and it's really 1 pullback, 2 legs down in a trading range. Also testing support. It doesn't look like we quite got here, but actually it looks like we did. 36, this bull breakout trapped traders. And what are traders going to do when we retest this price? I'm saying the same thing over and over, but this is the logic. This is the way that I think through price action, is breakouts and second legs and trapped traders. Bar 36, let's do it in real time, as if it's real time. Maybe let's take the bear perspective, and you have this big sell-off, lower highs, lower lows, but then we break out here. Okay, maybe it's a trading range. We're high in the range, and you're looking to sell, and you see a second leg trap, so you're looking to go short. And let's say you are short. 36 traps you. It depends on where you entered, but it doesn't matter where you entered at this point. You're trapped into a losing position if you're a bear. If you're a bull, and maybe, who knows what it is, you want to buy a deeper pullback because the market's in a trading range. So you want to buy a 50% pullback. Well, the market doesn't get there, and we start to rally on 36, and we got follow through. So bulls are trapped out. This was a pretty impressive rally. So what's going to happen back down here at the breakout point where traders got trapped? The expectation is support, because bears who were trapped into a losing position, what are they going to do logically? If they are short somewhere in here, and maybe they sell more below 45. Some will exit here at break even on the entire trade, and you can see the reaction. Others will wait and see if they get the retest of the breakout point. And what are those bears going to do if we get back here? They're going to buy back shorts. Would it make sense? Let me put it this way. After seeing what happened here, this breakout and follow through, it's really a minor bull trend. Are you eager to sell when the market gets back to the bar 35 high? Of course not. And the same logic is true for the bulls. If they missed the rally, they're waiting for a pullback to enter the market at a discount and capture a second leg. So everybody buys here. This breakout strong enough for its own second leg. And this might be part of the second leg of this. So breakout, high 2 on a higher time frame, and then maybe a rally to a new high, which we ended up getting here. And it looks like we tested the low of yesterday at the end of the day, and there's a reaction to that there. This breakout on the open was strong enough for a second leg, and you can say we pulled back and the bears got it. But maybe this entire channel, the bull channel, was a bear flag, and maybe the bears were looking for one prolonged pullback, maybe two. But in this case, we remained within the channel. But we'll see what happens tomorrow to set up a bad stop order buy signal bar on the daily chart. And like I said, it looks like the daily chart has had several legs up. And this was the top of a trading range, and then this was a pretty impressive breakout, strong enough that a second leg down is likely. Now I wanted to share one thing before the end of this video. I said I was working on my level 2 study, and what I looked at today was, and I'm studying a 3-bar microchannel signal. I wanted to see how often, if I buy the close of the signal and use a 1-hour stop, and for me I define that as a stop one tick beyond the pivot point of the signal, what's the probability that you could exit at break even after a technical pullback and before the stop is run, the 1-hour stop? And the number I came up with was 82%. So 82% of the time you can exit at break even. The break even exit is possible. And that's with no filters. And the sample size could be bigger. I think I have 107 samples right now, but it's not quite a full month's worth of data. So I will be collecting more on that. But 82% is pretty solid. And it reminded me of something that Al said, which now has a whole new and deeper meaning to me, which is that only about 10% of the bars on any chart are in a really strong breakout, which means 90% of the bars on the chart are within that gray fog of between 40 and 60%. And what he says with that is a trader can buy or sell at any time, and as long as they understand how to manage a trade, they can avoid a loss 80% of the time. And it seems to be holding true. And what's really interesting about that stat, and what I discovered with my study today, was that didn't even include scaling in. And that was with a 1-hour stop. So I'm still going to continue with that study to see the results with what if I had a 1.5-hour stop and a 2-hour stop. And then I'll see, well, what if I scaled in at maybe the 1-hour stop location or a breakout point or whatever it happens to be. So it's pretty interesting stuff. And one more thing I will add, that this is just encouraging. I always like to say, I'm not telling anybody what to do, but I make these videos as if I'm talking to my younger self and saying things I wish I knew. And what I would say is, let me put it this way. I remember when I first started watching Brad's end of day reviews, And I used to watch Al when he did them, and then Brad took over. And when Brad started doing them, I don't know how long it took for me to start doing my own. But when I would do my own, what I would do is I would record myself, and this was before I posted videos on YouTube. I would record myself talking through the end of the day, doing my own review. And then I would watch Brad's review, and I would see, my goal was to talk about everything he talks about. And I wanted to see if, did I cover everything Brad said? The reality is that everyone sees the chart a little bit differently. And, if you did an end of day review, you're probably going to see things or mention things that I didn't in my own review. And it depends on if you're doing a bar by bar, how in depth you're going. Are you making a 15, 20-minute video? Are you making a 3-hour long video? It depends on your goals. What I would encourage everyone to do, if you watch my end of day reviews, is just try to record yourself and practice reading the chart yourself, because it's one thing to watch someone else do it, and it's an entirely different thing to do it yourself. And I don't know the whole science behind this, but I know enough that, to me, I know what feels like the right thing to do, and that is, it messes with your dopamine when you watch someone do something and you don't do it yourself, because it feels your brain doesn't know the difference between you doing an end of day review yourself and watching someone else do it. And you can still learn a lot, and it's a great resource. But again, I would challenge everybody to try to record themselves and talk through a chart. And you don't have to post it online, but you could have your own personal library. And one more thing I'll add with that is I really encourage everyone to do a level 2 study. And I will make a video on how to conduct a price action study, because that's too much to talk about in an end of day recap. But basically, just pick one thing to study, stick with it, and learn everything you can about it. And understand, the goal is to understand market behavior in all contexts and develop really reliable, calibrated expectations. So that's it for today's video. Thanks everybody for watching. I really appreciate it, and I hope everyone has a good night.